Welcome back, traders. My name is Manuel Fonseca. Welcome to Smart Habits. In today's video, we're going to see examples of how to identify an order block and imbalances. If you have missed the video in which I explain this concept of order blocks and imbalances, I kindly suggest you to watch it, which is in the first comment here below. Now we're going to see different examples, how it works, and also what are the different things you have to bear in mind. You identify a proper order block or an imbalance. All right, let's go to the market.
I'm gonna read to you the definition of an order block. I'm gonna talk about it theoretically, just like a quick, like summary for this video. But if you really want to know step by step how it works and in which it consists, please go to the video which I just explained, order block and imbalances. Today, I'm just gonna show you examples of how it works. Okay, so order blocks is the last bullish or bearish candle before a strong market move. Okay, that breaks the structure. Now, because we are doing an example in a bearish range, and this is something I also want to highlight, we're just going to show examples in a bearish range or a bearish trend market scenarios. Okay, so we're gonna take into account the bullish candle. Okay, sometimes I take even the bearish, but I'm gonna show you why in that moment. So it represents the area where the institutional orders were placed, causing the impulse that shift the price direction. These zones act as a high probability areas of interest where the price often returns to mitigate pending orders. So this is the key thing. Order blocks help us understand where the price will mitigate previous orders, all right? So, and because are high probability areas of interest. Okay, that's what here is where it comes the concept of point of interest. Before continuing with the main trend, okay, so we're gonna first talk about order blocks, then we're gonna talk about imbalances. So imagining this, that's why when we have this liquidity sweep and did a break of the structure here, which is not signed, but you know it is. Here you will find an order block, which imagine here it will be a bullish candle that will create the movement, right? And then, as in this example is portrayed, a price will go to this and mitigate pending orders and will go pushing down, and they will make a break of a structure right here, right? Perfect. This is it. Now, some people have asked me, these order blocks have in this smart money concept have some names. I don't use it that much, but I'm gonna put it here because we're learning basic concepts. And this is called the extreme order block, right? It's called extreme or origin, okay? And its name is called like that. It's because this is the creator of the movement. It means that from this order block, we will start, or we will have here a beginning of a range in a bearish range, correct? And this order block was the extreme or the origin. So from this order block, the movement starts or the impulse starts, right? And then we will have more order blocks in the market, right? That will be called now. Imagine that here is another order block, all right? Order block. This will be called a decisional order block, right? Decisional order block. Why is it called that? Decisional comes from the word decision. So it means that you need to make a decision because in some moments of the market, unless we will find a confirmation or we follow other pattern or actions or decisions according to what is showing in the market, we will just get lost. We will execute or not an order, as simple as that, right? And those point of interest or those order blocks are called decisionals because you made a decision, right? You think if you're gonna make it or not, simple as that, right? Perfect. So mostly in the market, we're gonna see examples later, but in each break of structure, you will find So for example, this was the week low, right? After this break of structure, you will find here likely to find an order block as well as this break of structure. So in this high, is probably to find an order block as well, right? And so on, break of structure, and here you will find break of structure, right? All of them, all those order blocks will be called decisional order blocks, right? And which one of those will work? That's a matter of more advanced classes. For the moment, or for the sake of this, we're just gonna see examples of order blocks, okay? That's it. That's the only thing you need to know to spot the order blocks, which is the aim or the main goal of this class. Understand it and spot them, okay, in the market. Now, we have already seen the definition of an order block. Now let's go to the definition of an imbalance, okay? Now, an imbalance is a price inefficiency. You can also will find for other traders or in other books or in internet, this will be also called an imbalance or an inefficiency, okay? Or a gap. So now it is created when there is strong displacement in one direction, leaving little or no trading activity between the weeks of the consecutive candles. Okay, this occurs when institutional orders move the market aggressively, causing uneven distribution, the buy and sell orders. Price often returns to these areas to fill or mitigate the imbalance before resuming with its intent direction. Okay, so again, if you want more detailed information about this, please watch the video which I show you clearly how to spot them, okay? Perfect. Now, imbalances are very close to the order blocks, okay? Once you do the back testing, just realizing they are very close one to each other, located in market, right? As in the definition said, this is a strong displacement in y direction. So for example, if you see this drawing, these down trend impulses, right? The just perception, that's just perceiving it is a strong displacement of the price toward the bearish direction, right? So they will be located mostly in these spaces. So if you have ever done trading before or following the smart money concepts theory, sometimes you will find that, oh, I have put an order on an order block, and then this order block was not respected, it was broken, but then the price reacted a little bit higher or lower of this order block, and the price followed the original trading of the market I was intended the price did, right? And why that happened? It's because likely because it happened to me many times, and then I realized that prices were reacting not in an order block but in an imbalance, that it has practically the same function as you have said, as you have listened. That is, the price will fill or mitigate the imbalance. So imbalances and order block are areas where the price will enter and will keep pushing down. Or in this example, right? In this scenario of a bearish example. Right? All right. So this is it. When you have this, man, the market is even clearer for you. Now you know where are the most likely point of reactions of the market, and you wouldn't be like, let's say, no beginner traders, because we were okay. You wouldn't be that naive or just chasing the market, right? Because you will find point of reactions, okay, point of interest, where the price is likely to do what you were thinking the price will do. So if we have a bearish range, right, the price even get to this imbalance and have a reaction. Wait, sorry, that's one possibility. Then since this point the market is here, or the price keep pushing up a little bit more, or entering this order block and going down, have the reaction we're expecting the price do, or the price can keep pushing up, even even up. Look, for example, here was an imbalance that I didn't put, but here's another imbalance. But imagine that we're just gonna omit it for the sake of the video, right? The price gets to this order block, I have a reaction. Or even the price goes a little bit up, enter to the imbalance, and keep with the direction. So we have, just with this scenario, limited the options in trading. Smart money concept is a beautiful trading methodology. It's the one I love because I really like how simple you can perceive the market movements. The only problem I can see with this strategy is that when you get your mind with lots of concepts, it's nice. I mean, you become an expert finding concepts. But this is not about concepts. This is about making money. And you need to limit the options in which you're gonna work with the market. And you need to work with those options, make them profitable, and then start making money on this, because that's why you're learning this stuff, or not. So that's, with this scenario, knowing the order blocks, the imbalances, your mind says, perfect, now I have certain places where I'm gonna put my orders and where I will wait for them to see if the results is really what I'm reading or expecting from the market, right? And you limit your options, and there's a losing trading money and trading and trades and operations, and like make a mess of your psychology just because you want to recover money. Now, beautiful recap, right? It's mostly like a full class of theory. Let's go to the market to see more examples. All right, so in my previous video, in which we analyzed the bearish big range beginning, I'm gonna use the same template, the same pair, which was Bitcoin versus USD dollar. And here we're just gonna try to analyze the order blocks and the imbalances. And if you haven't checked that video, I kindly suggest you to watch it so you will understand the logic behind these reactions and why we start marking this range beginning and endings, all right? So order blocks, let's try to find the order blocks. So remember that we said that we have the extreme or creator of the movement, which was the bullish or the last bullish prior before a strong market move that breaks the structure. So this was the first order block, because the one who breaks the structure was this green candle, but actually was this one. I'm gonna show you why. Look. So this is or bearish. This is our bearish extreme of the movement. I'm gonna put extreme or decisional, but just in the first few examples because it's very demanding sometimes. Extreme, okay? Perfect. So as you can see, the order the candle wick was made. The candle was made, right? It made a buzz, probably not in daily 4-hour time frame, which is the time frame we're working on now, but maybe in 4 hour, in 1 hour, maybe it did it, or 50 minutes. And then the price entered to this order block, this extreme move creator, and then it breaks the structure. Now, if you can see here, my friends, after the pause, the break of structure, we could take into consideration this green candle, but colors in the candles doesn't mean anything. We need to see if they are closing in a lower low, or in a higher high, to understand the actual or the real structure of the market. Candles doesn't mean anything, right? So we would say, is this the red candle that we have this, this green candle, the one that we have to spot as our order block? Not at all, my friends. We have to select this one, the red candle. Why is it why the red candle? I don't get it, but why? So, well, I'm sorry. After we have this break of structure, right? This break of structure, we will need to find the order block, which is this bullish. Okay, so this bullish will be this green candle. But actually, if you see here, can you spot this low of this candle, the red candle? Let me put it in zoom. So it closes in this point, but even this is a bearish candle, it makes a lower low, right? So this lower low means that this, because it's green, doesn't mean that it's bullish. It's just because it's still bearish, because the low is lower than the previous one. So it means that this candle is actually showing us signs that the price is actually pushing down, right? And then we confirm it with the red candle right here, right? And so on. So for the sake of this exercise, we're gonna take this into consideration, but I just wanted to show you that not all the order blocks or the bullish candles, green candles color, I'm talking about the color, are the ones that we were gonna take into in consideration, right? Perfect. But for this, it works. So after we have the break of structure, the price entered into a decisional. Decisional. All right, decisional. Why? Because the only extreme of the movement is the first one. The others are just decisional. Perfect. Now, in this decisional, we have even the price will enter again to mitigate more areas. And after that, remember that we have talked in the previous video about the weak lows. It was a weak low in certain moment. Once the weak low is broken with the body of the candle, can you spot clearly the order blocks now? I guess so, right? Since we're gonna stick to the liquidity or basic concepts of order blocks, excuse me, not liquidity. Since we're gonna stick with a basic explanation, we're gonna take into consideration this bullish order block right here, right? So here it is. Boom. We have another order block. Now we're gonna find another weak low that in this case was this one, right? This one. Remember that when we're analyzing the price, it made a break of structure. So the closest order block was then this one, this green panel right here, which we're gonna just take into consideration for the sake of this video, right? And to make the explanation clearer for us that we are learning. But sometimes we're gonna find that there are some order blocks that are not that clean, like very, very big, right? Like in this case, look. Okay, but it had a reaction, as you can see. And then we're gonna find another order block, right? So this was the break of structure, but let's look for the prior or the previous break of structure, which was this one. And here we have 4 order, right? So now we will have, imagine that we were here executing orders in the Bitcoin, right? And we already know that this is a, well, for this moment, if we were in this point, we will looking for, I will start looking for buying orders because the range has not changed. I mean, if I've been working with this bullish range, right? However, once the price break this, I will start looking for more order blocks. Okay, but now you can see a clearer picture. Now we understand why the price entered to this order block, push down, enter to this order block, mitigate these orders, keep pushing down. The price never reached this order block. What is the meaning? In certain moment in the future, we will see and we will expect that this order block help us, or will be a zone of mitigation, or will be highly respected, right? This time will tell. Now, we're gonna try to find imbalances, right? So imbalances, remember that is, we will find, I said to you, we will look very clearly, we're gonna just spot the the strong displacements in one direction, leaving little or no trading activity, right? Which means, in other words, huge candles, right? And we're just gonna try to find the 50% of these imbalances right here, right? The imbalances, the let's say per value, it's called, or the sensitive area, which which imbalances have the best reaction, is in their 50%, right? Remember, watch the video, and I show you even how to use the Fibonacci tool to make it like this way. So now we can see that the price reacted here on this imbalance. Now the question is, why the market did not get to these imbalances, and it just entered to this, made this strong high, and then respect the strong high and keep pushing down? Simply because here it was another imbalance. Can you see it? This imbalance right here. So this 50% had a reaction. Here was the price. The price did have a reaction here. It complete the full gap, so it complete the full space that we had here. But after entering this in this area, in this zone, the price make a break of structure, and then it broke the market range. So it means that we are facing a new strong high, right? And the same example, we have to keep pushing on, carry on, right? So that's why the price just entered to the zone, keep pushing down, provide us a new strong high, we update the range, and now we have to do the same exercise on repeat once and over and over and over again, right? So let's do it again. This is an exercise. This is a video of exercising. And by the way, if you want to learn more, my friends, do not forget to subscribe and join to this community and this channel to keep watching more valuable videos of trading. Now, whilst we have here the strong high detected, same exercise. Let's find the order blocks, which this is the first order block, find here. This is the closest order block at the price. So if the price did have a reaction, enter right here. Then look, the price go up. And the question is, why did the price did not enter to the order block? Most of us will be a little bit desperate. But remember that here is a what? An imbalance. That's right. So that's the only thing we missed to mark in this bearish example. And it was the imbalance, which it starts from here and ends in the next candle. And the price, look how beautiful it was. It entered to the liquidity of these highs that were here, and here the price did not reach the 50%, unfortunately, to make it even beautiful or more perfect, but has the price, this is how the price works. And just keep pushing down. And many people start selling desperately here, desperate, selling, and then the price keep pushing up and enter to the order block area. And as I said before, this candle wick is just a liquidity taken, right? Just a liquidity taken. Maybe this candle was reacting here at imbalance in 1 hour or 50 minutes, enter right here and keep pushing down, okay? And it keep pushing down and it keep pushing down, right? Until it breaks the structure and make us a new strong high right here. Perfect, that's it. But now let's try to analyze the first strong high, that was this one, okay? So once the price entered to this order block, it keep pushing down with the downtrend. It went and it break it make a market shift again, so continuing with the bearish range or bearish trend. And now we will have here this strong high. Now, from the strong high, we're going to keep analyzing the order blocks. So the bullish, this is the bullish candle right here, bullish candle, boom. We have the same after break of structure, the price break it. I have my cat here, but no, you need to learn. So break the structure, perfect, nice, so well done it. Then we have here the next break of the structure of the next low was this one. And look at the next. Here we have another order block, right? Remember, this is called the decisional, and this is called the extreme, and this is called the decisional. Perfect. Well, look how beautiful. It entered right here, and then it keep pushing down. Perfect. That's it. And this is scenario, it just provides us two order blocks, extreme and decisional. And actually, these are the ideal scenarios, like the most beautiful to see because they are clearer, decisional, right? They are clearer to understand, easy to follow. But the first one we analyzed at the very in just a few minutes ago was not the best ideal scenario, but it's how the price is. Simple. Right now, imbalances. Let's try to find imbalances. So again, remember that there are strong movements or displacements of the market. So here we have a candle. We put here our imbalance, and well, the price did not reach this area. The price just did the next. Enter to this order block, had a nice reaction, but then it break it with just the candle wick. And probably it reacted right here in another order block in a small time frame because it also happens. But the important is that this is not a body of the candle, so it's just a candle wheel, which means that the price is pushing down, break up the structure, and now it broke or down or weak low, making this strong high and the same exercise on repeat. Okay. So, and this is more difficult to spot because look how many order blocks we could find here, we could find right here, and it also imbalances. And this is actually how the price currently are in the Bitcoin, right? Now, I'm gonna give you 2 minutes to analyze the market, the order blocks and imbalances, and we're gonna see if we are correct. Let's see. Sorry, 2 minutes is too much. You cannot wait 2 minutes in a video, so you will skip it, right? Let's keep analyzing order blocks. First one, extreme. Gotcha, we got it here. Breakup structure. Probably the price reactor here did not reach our order block, but we know that this is the extreme. We're not just analyzing the order blocks, we're also seeing the reactions of the market. Extreme. I think that's the easiest to spot, right? Nice. Now let's keep analyzing another breakup structure. So why is the price enter here? It made a small breakup structure. It led us with a small order block. Now this is actually a very beautiful order block, very clear. Boom. Price enter, reactor, boom. Breakup structure again. When the price made this order block, led us with this order block here. Boom. Was it mitigated? Not at all. Perfect. Price may break the structure, do not mitigate this order block. Probably in the future it will do it. Then we have this low. This low was breaking with the body of the candle, which means this order block right here could be considered or decisional. And now this is what I said. This is the decisional, this red candle, not the green one. Why? It's because of the sake of the because this is a really small candle, I don't think it will be respected. So that's why I selected this and it entered to the fair value. or the most sensitive area, watch the video, please, about when I explain all the theory, and then keep pushing down. So break the structure, excellent. I mean, when I say that breaks the structure, is that it breaks to the next, breaks the structure with the bottom of the candle, boom, and then let us this red candle right here, or even this green candle, both could be considered order block, decision on order block, right? Nice. Breaker structure, perfect. Now let's keep it spotting. Then we have this low right here. This is the low, recent low right here. And again, after the break of the structure with the bottom of the candle, we have what? Another order block. And this order block oh my gosh. The price did mitigated this. Break of structure, enter to the order block, and keep pushing down. So an opportunity to sell, very clear right here. Boom. And that's it. Now, the closest order block is this one in the Bitcoin. This is not for you to sell. Of course not. I'm not giving a recommendation, but here it is. Perfect. Now, if you see the next and you want to sell on Bitcoin, you will have 1, 2, 3, or 4 order blocks to probably thinking on executing selling orders. I'm not advising you to do it now. Do your own analysis, right? But this is what this theory provides us, okay, to analyze it properly. We have here a decisional, okay, decisional, and all of them are decisional. Oh my gosh, all of them are decisional order blocks. So decisional, decisional, decisional. What is missing? What is left? You're right, the imbalances. So we can find here strong displacements because we're in a bearish trend. The red candles will provide us the clearest insights to spot imbalances. So here is one. Perfect. Second one is right here. If you're thinking and going too fast, my piece of advice is just stop the video and think for a while. Is this a really strong displacement downwards? Yes, it is. Okay, so now this is for imbalance. Here, there is no very clear imbalance. This is just consolidation of the market, not very clear. But here, we could see another imbalance. Look. Perfect. Okay. Order block, mitigated order block, and now we will find here another imbalance right here. So guys, if you're executing orders in Bitcoin, this is a perfect template for you to have decisions. Now you have 1, 2, 3, 4, 5, 6, 7 limited options. 8 limited options to execute orders. And I say, like, are you crazy? And I'm gonna execute 8 orders in the market? No, of course not. You just have to execute the closest to the current market, right? So you could execute this one here. Probably we will have a reaction to keep pushing down, right? Or you could execute this one in the Bitcoin, or you can, these are the block, but you just keep executing this one after taking the liquidity of this high of this imbalance, keep pushing down, or even the order block. Perfect, right? Or you just can wait and execute this imbalance, or this one, right? It just depends on that, right? Now, definitely, this is not a piece of advice for you to put your own money or get into debt to do this stuff. Of course not. Do not do that silliness, please. It's just for you to take into account this and then confirm it, use the proper lot size, and the correct risk management rules, and then execute orders as a professional trader, not as a naive or a gambler trader or gambling trader. This is not from gamble here, no, of course not. Perfect, guys. So my piece of advice: do 10 to 30 examples of analyzing this. If you have seen this class, it's not likely an hour of analyzing the market, right? You have to do that. You just have to sit, do back testing to these concepts. And if you want me to check them, you can put them in the comments so I can help you analyzing them in a further videos explaining for you and other people, like, look, this is the question some people have asked me, and I can help you with this basic concept of trading with the smart money concepts. All right. Please, if you like this video, subscribe, share, comment in this box, share with the group of friends you think it will help you. I will keep posting more and more valuable videos. Please download my guideline, my free ebook, which is down for you, and follow me in all the social media. Okay. This is no more to say, my friends. Thank you so much for watching this video until this moment, and let's keep trading. Bye bye.